our country, India, became the first nation in the world to receive $100 billion of remittances in the year 2022. Yes, that's true. And this was stated by our own finance minister while quoting a report from the World Bank. She also called the NRIs as a true ambassador of India. Not only that, even a year before, in 2021, India received the highest remittances, even more than China. So I thought in today's video, let me talk about how do resident Indians become NRIs and how do they invest in India by opening bank accounts, doing investments, and participate in the story of growth of India. So an NRI is an individual who has traveled outside India for some business or for employment for an uncertain period of time. And he or she can attain a NRI status due to a couple of criteria. One, if they've stayed in India for less than 182 days in the financial year, or in the preceding 4 years for less than 365 days, and in the current year, less than 60 days. And once an individual acquired the NRI status, they can open up the bank accounts in India, and the bank accounts could be a NRE or an NRO account. Now let's talk about certain key differences between the NRE, which is non-resident external, and the NRO account. So the NRE account is primarily for moving all your foreign incomes to India for savings and investments, whereas the NRO account is to basically save all the income generated in India. And NRE account, all the amounts are fully repatriable. The interest as well as the balances are not taxable. Whereas an NRO account, the interest can be fully repatriated, whereas the principal has certain limits up to around 1 million USD in a financial year. And the tax is applicable on the income earned. Now in terms of deposits and withdrawals, in NRE account, only Forex can be deposited and INR can be withdrawn in India. Whereas NRO, both the Forex as well as the INR can be deposited and withdrawn from India. So now let's talk about how do NRIs can invest in India, whether it's real estate or mutual funds. So the NRIs can invest both from NRE and NRO funds in mutual funds as well as real estate. And for mutual funds, the taxation is somewhat similar to what resident Indians have. Only thing, it is deducted at source. So it is a TDS. For equity funds, the taxation is for less than 1 year is 15%, which is short-term capital gains tax. And for a long-term capital gains tax is around 10%. For debt funds, the taxation is same, deducted at source at the rate of 30%. So for all your non-equity funds, it's 30% for NRIs. Then India also has the DTAA, which is Double Taxation Avoidance Agreement with around 90 countries. Using that, NRIs can benefit from not paying taxes twice and also from a lower rate of taxation as per the country where he or she is residing. And one can also benefit from by setting off the short-term capital gains against short-term capital losses and the long-term capital gains against the long-term as well as short-term capital losses. So I hope you found this point interesting about the NRIs, how they can invest and save in India. Look forward to see you soon. Thank you.